Welcome to this Ohio Farm Bureau webinar talking about current agricultural use value, otherwise known as CAUV. As you might have heard or will hear very soon, values are set to increase substantially in the 2023 reappraisal update, affecting 41 counties that'll see new tax bills in January of 2024. Now, currently, some county auditors have reported CAUV values increasing between 80 and 100%. Why are values increasing, and how much will taxes increase as a result? To answer these questions and more, I'd like to introduce Ohio Farm Bureau's Policy Counsel, Leah Curtis, our resident CAUV expert. And Leah, there are going to be a lot of questions out there, but hopefully this webinar will have all the answers that our members are looking for.
Thanks, Ty. Yes, we are hopeful today that we can answer a lot of your questions about CAUV and what's happening with the CAUV values. So I'm going to bring up some slides here. And as Ty said, I'm Leah Curtis. I'm Policy Counsel and Senior Director of Member Engagement. And we're going to walk through several topics to do with both your property taxes and CAUV. So we'll start with talking about the basics of your Ohio property tax, walk through some basics of the CAUV calculation, and then go into what's happening today with CAUV values. So starting with our property tax system. It's good to understand that our property tax system is controlled in part by the Ohio Constitution. And one of those requirements is that you will be taxed at the property's true value in money. But the exception to that is that current ag use valuation program that we're all familiar with. And that was done through an amendment in 1974. Second important part of this discussion from the Constitution is that our taxes have to be uniform in rule. And that means essentially the general way that we tax has to be the same across all property types. There is an amendment to the Constitution that created two classes of property, that being residential and ag property, which we commonly call Class 1, and then all other property like commercial, industrial, etc., is in Class 2. And that was done through an amendment in 1981. Second, I'd like you to be familiar with when your property tax value will change or will be updated. And that happens through a reappraisal every 6 years, and then a triennial update that happens every 3 years after that. For CAUV property, that means that every 3 years you're seeing a new CAUV value. For your home, your buildings, and all the things that are valued at market value, you're also seeing a change in those values every 3 years. And this map shows when those are happening based on county. The counties in yellow are on reappraisal or update in 2023. Keep in mind that we pay our property taxes 1 year behind in the state of Ohio. So you will see a new tax bill in January of 2024 if you're in one of those yellow counties. Blue counties will see new tax bills in January 2025 after their reappraisal and update in 2024. And the green counties just saw new tax bills this past January, so they won't see them again until January of 2026. Now, when we tax property in the state of Ohio, we do not use that full value. So what you will see oftentimes as your full assessed value is not what the tax rate is applied to. Instead, your value is reduced to 35%, and that is the assessed value, or sometimes called the taxable value, on your property tax bill. And that is what your tax rate will actually be applied to. If you're a CAUV landowner, which most likely you are if you're watching this webinar, keep in mind too that you essentially have 4 components to your property value. Your house, which is valued at market value. Your home site, which is the 1 acre around your house, is also market value. And your buildings, which are valued at market value. The CAUV value applies to your other agricultural land. So anything that is not agricultural land is still going to be valued at market value, but your agricultural land will receive that current ag use valuation. So now I want to talk a little bit about your tax rate. We're more familiar with tax rates being presented as a percentage, but your property tax rate will be presented as a millage rate. And 1 mil equals 1/1000th of a dollar. So 10 mils equals 1% of your property value. Your property tax bill is going to be a combination of both unvoted and voted millage. The first 10 mils are unvoted. They're required by the Ohio Constitution. And then the other millage on your property tax bill is generally voted on by you and your fellow citizens in your taxing district. Your millage rate does depend heavily on which taxing district you live in, and we have a lot of taxing districts across the state of Ohio. And those millage rates across those districts can range from lows of 25 or 30 to even up above 220 mils. So depending on where you live, that will determine what the tax rate that is applied to your value will be. Lastly, and probably the most complicated part of our property tax system is what we call the 920 effect, or House Bill 920, or the tax reduction factor. So this stems from a bill in the 1970s called House Bill 920. And the main principle here was to keep the original amount raised from voted millage in control while that levy remains on your tax bill. And the goal was to prevent windfall from inflationary increases in property value, to limit that money raised. And there are some exceptions to it. It does not apply to that inside millage. Those first 10 mills of your tax bill are not subject to 920. Additionally, school districts who have reached the 20 mill floor will continue to receive 20 mills of funding, despite the fact that 920 is present. And so what 920 does practically is it says whatever amount of money was collected that first year of that levy being on your tax bill, that's all that can be collected every year thereafter. So if a levy collected $1 million in its first year, let's say that was in 2010, and that levy is still on your tax bill today in 2023, it still can only collect $1 million. And that operates by rolling back the millage rate to make sure that the same amount of money is collected. So when you look at the 920 effect, you will often see on your tax bill a difference between gross millage and effective millage. The gross millage rate is the rate that you voted. The effective millage rate is the rate that you are charged. So practically what happens is we start with the voted millage and the dollars raised. A tax reduction factor is calculated to ensure that the same amount as what was originally raised will be raised today. That's applied to your millage so that it's rolled back to what its effective millage rate will be. So again, for example, if 100 mills would raise $10 million, but today, as that levy has been on our tax bill, the actual property value means 100 mills would raise $20 million instead. That millage would roll back to 50 mills, so that same $10 million is only collected. Again, this doesn't apply to the inside millage on your tax bill, but it does apply to the other millage that has been voted, largely your levies, and that is a property tax control that's in place in Ohio law. Now, once we get through all those basics of the general property tax system, now we can start talking about CAUV, or current ag use valuation, which is why all of you are here. Many of you are already on this program, so you may be familiar with it, but we do want to go through some basics just in case someone is not familiar. So while we talked about land is generally valued at its market value, the value would change hands between a willing seller and a willing buyer. CAUV values land for its income producing potential from agricultural use only. So this was created through an amendment in the 1970s, and it was trying to address the development pressures that were pushing up the value of farmland, making it difficult for farmland to stay in production. And so instead of taking that sale price for its market value, we instead use the agricultural value for property taxation purposes. The way this works is that the Department of Taxation calculates the CAUV values for all 3,500 soil types. So every soil type does get a unique value. Those values are presented to the Ag Advisory Committee, which Ohio Farm Bureau does serve on. And that committee has an opportunity to make comments, though the Department of Tax remains in charge of how those values are calculated. Then the Department of Tax finalizes and provides those values to your county auditor, and the county auditor applies them to your individual property. So the auditor is going to look at the soil types that are on your property. They're going to match it up with the values that have been provided to them by the Department of Tax, and you will have a unique CAUV value that is tailored to the soil types for your farm. Now, I mentioned a calculation that the Department of Tax uses, and it is a somewhat complicated calculation, but it boils down to a basic calculation of net income divided by a capitalization rate. And that calculation is based on 3 crops: corn, soybeans, and wheat, those being the 3 most prevalent crops in the state of Ohio. And the calculation uses 5 factors to apply to those crops. We start with yields, which are unique to the soil type, and then updated using a 10-year average of statewide yields. We then go to crop prices, which are from the USDA Ag Statistics Service Ohio office. 7 years of data are used with the high and the low dropped out. Next, we subtract out non-land production costs. These, again, 7 years of data, highs and lows dropped out, and these come from the OSU Extension crop enterprise budgets. And then last, we multiply by the cropping pattern, which comes from the USDA National Ag Statistics Service Ohio office, and this is the percent acres harvested of those 3 crops across the state. That gets us to our net income. Then we divide by the capitalization rate, which is made up of a debt rate based on a Farm Credit Services mortgage for farmland for 25 years, and an equity rate that is based on the USDA's return to equity 25-year average. So as you can see, we're using objective statewide data and multi-year averages for all of these factors. And they're largely coming from either the National Ag Statistics Service Ohio office or our non-land production costs come from OSU Extension. And I want to note that each soil does start with a unique set of yields for the 3 crops. So soils that are more productive and in more productive areas of the state are going to have higher values, and lower productivity soils are largely going to have lower values. Now, as I mentioned, there are 3,500 soil types across the state of Ohio that cropland and woodland values are calculated for. In general, everything is cropland unless it's woodland. Woodland is typically wooded with at least a 30% hardwood species. To get to woodland values, the department takes a cropland value for that soil type, deducts for the cost of clearing, and then depending on the soil's drainage capability, they may also make different deductions for drainage. In addition, there are minimum values that have been set by the Department of Tax. So cropland will be valued at $350 per acre as its minimum value, and then woodland, or anything that has over a 25% slope, will be minimum value of $230 per acre. Now, those are the basics of the CAUV calculation and valuation. But one thing I do want to highlight that was added in the 2017 reform is that conservation land can also qualify to be valued at its minimum value instead of its standard soil value. So if you have land that is enrolled in a federal conservation program, things like CRP or CREP, or if you have installed conservation practices onto your property that abate soil erosion, things like riparian buffers, windbreaks, wetlands, you can certify that with the auditor and have that land valued at $230 per acre. And that is, again, the minimum value of the CAUV table. You do have to keep that conservation use in place for 3 years. If you keep it 3 years and then make different decisions, that's fine. If you remove it before 3 years, you will have to pay recoupment. So you'll pay the difference between its actual soil value and the conservation value. But if you keep it for 3 years and then make a change, that's fine. There won't be any recoupment due. This is a really unique opportunity for landowners to control their CAUV value by using those conservation programs or conservation uses. And it was a significant part of 2017 reform to make sure that we recognized the value of conservation and that people weren't penalized for using conservation on their farmland. So now let's talk about what's happening with CAUV values today in 2023. As Ty mentioned at the top, CAUV values are set to increase substantially for those in the 2023 reappraisal and update cycle. And this is due largely to the fact that we've seen very strong crop prices over the last several years. Again, we're looking at data from the last 7 years. That's 2017 to 2023. The CAUV formula is intended to follow the farm economy, and that's been its intent since its creation in the 1970s. And so as we've had a very strong farm economy over the last several years, we are seeing CAUV values respond accordingly. So we often get asked about the costs in the formula. The costs have also increased, and there's no doubt about that. But in general, they've not increased at the same rate or over the same time frame as the crop prices, which are having a larger effect on the CAUV values currently. Again, I'm going to put up this map just so you can see if you are in one of those counties in yellow that will see these new values and tax bills in January 2024. Your auditor may have the updated value for you sometime this fall. They typically do have those available in the fall season and can give you an idea of what the value will look like. Your tax bill probably is not going to be available until closer to the end of the year. Oftentimes, if there are things on your ballot in November, that has to be determined before they can figure out what your new tax bill will look like. But those are things that you can contact your county auditor and ask them about, and they can give you the time frame of when that might be available. So what do you as a landowner on CAUV need to know? it is likely that your CAUV value is going to increase significantly. And again, as Ty mentioned, it could be in the range of 80 to 100% on your value. Keep in mind that you are taxed at 35% of that total value. So that is not your taxable value, but your full value. There will be an increase in taxes, but the increase in taxes is not likely to be the same as the increase in value. It's likely to be less than that increase in value. Keep in mind that 920 effect that we talked about. This means that the same amount of money that is raised for most of the levies on your tax bill has to be kept the same. So that would limit the increase in taxes even as property values increase. I also want to mention that we have seen residential values increase across the state in most areas. So keep that in mind when you're reviewing your total tax bill and the values on your home site, and other buildings. Those may not be clearly delineated on a value update statement. So you may want to look at the online portal that your auditor may have, or talk with your auditors so that you can compare the differences between those different components of your property. We also often get the question whenever this happens with CAUV is CAUV still saving me money? And there's no doubt that CAUV saves property tax dollars for Ohio farmers across the state every year. In 2022, which is the most recent data we have available, the taxable CAUV value of all CAUV property in Ohio was only 22% of that same property's taxable market value. And if you look at it, use an average tax rate and work that out, that's almost $1 billion in savings. So while our mid-range soil is valued at about $2,340 per acre, when we look at USDA data that compare, USDA currently puts Ohio farmland at about a value of over $7,000 per acre. So we do still see significant savings from CAUV, even when we see CAUV values increase. Finally, what is Farm Bureau doing in regards to CAUV? Keep in mind that our policy supports the CAUV formula be based on objective data. And at this point, we do largely have objective agricultural data is what is driving the formula. Our policy, though, does also support limiting volatility in the formula and in the values. At this point, we've met with the tax department to discuss these issues and continued our call to regularly review and thoroughly review the CAUV calculation, something we do internally, but we also are working with the tax department as well as other partners to continue that review. We know that the spikes in value are a huge concern, and we are raising that issue with the tax department as well as other partners in the legislature. Additionally, the 2023 state budget included a joint legislative committee to review Ohio property taxes, and Ohio Farm Bureau intends to actively participate in that process to advocate our policies regarding both the general property tax system, specifically to CAUV, as well as in general. We know that we have a unique knowledge of the CAUV program, and so we want to make sure that we can work with the legislature to help them understand the program, as well as our other policies passed by our members in relation to the general property tax system. I hope that this webinar has helped you to understand a little better about the CAUV program, your property taxes, and what's happening currently with CAUV. Of course, if you have questions or anything comes up, we're happy to help you as those arise in relation to CAUV or any other topic that we can be helpful with. With that, I'll turn it back over to Ty.
Thank you, Leah. Leah Curtis, Policy Counsel with Ohio Farm Bureau, a great resource for our members as far as CAUV goes, has been for years. And she and her team put together even more resources, including an FAQ page and a new Legal with Leah podcast. You can find both of those online at ohiofarmbureau.org. Leah, appreciate all the insights. I know a lot of members are going to have a lot of questions, and hopefully this webinar will help answer quite a bit of those as they get these new bills in the mail. Thank you.
Thank you.